You are watching Market Watch, the brief overview of the key events from the world of finance. Last week ended with a significant increase in the Nasdaq and S&P 500 stock indexes, which updated their highs for 4 days. But this week may become much calmer. There are at least 2 reasons for this. Firstly, there will be no important industry reports, and in general, the news background will be moderate. Secondly, Liberation Day is celebrated in the United States on Wednesday, so the current week will be short, and therefore trading volatility may decrease. All this is clearly not a good signal for buyers, because after explosive growth, any respite is the way down. Let's also pay attention to the strength of the US dollar, which managed to strengthen or at least not weaken in a pair with all major currencies. Despite a moderate decline in US government bond yields and the growth of key stock indexes, the US dollar index ended the previous week in the green zone. Perhaps this indicates a general weakening of most world currencies, or a clear overbought Nasdaq and S&P 500 indices. This dilemma can be quickly solved by the appearance of a not very strong bearish fundamental factor for the stock market. If the sales are strong, then the overbought theory will be confirmed. The inflated stock market is also indicated by the still high value of gold, or rather the absence of obvious sales. Recall that gold is a protective asset that cannot be near historical highs at a time of stability. Stability is indicated by the regular updating of highs by the Nasdaq and S&P 500 indices, but gold did not decline last week, indicating still high uncertainty in the market. This is another point in favor of the fact that the rapid growth in the stock market may be unstable. Traditionally, we are completing the review by the cryptocurrency market, which ended last week in the red zone. This is clearly not a good signal for buyers, as the technology sector has grown significantly. Consequently, a change in sentiment in the US stock market will only increase the pressure on Bitcoin and other coins. But until the price returns below 60,000, you should not panic. Moreover, any decrease to the marked level can be considered as a discount, and most likely professional investors will do just that. But the risk of a collapse below 60,000 remains high. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.